Is it really possible to lose all your investment funds? You see, the reason I'm asking this is because there has been this information going around social media that we should quickly withdraw our money from the banks and investments because an economic crash is on its way coming. I will highlight more on that particular issue in the next video and whether there is a cause for alarm. So make sure that you have subscribed and turn on the notification bell so as not to miss that particular video. But on this one, I would like to narrow down to the money market funds and the fixed income funds. What would it really take to lose all your investments in these particular funds? I know we have already talked about funds being under regulation and how your first line of defense is to ensure that you do your due diligence and make sure that your fund manager, both your fund manager and the fund itself, are both licensed and regulated before you put your money into it. But are there factors that are beyond this regulation that could turn against your investment? I strongly suggest that you watch the full video to understand these subjects in totality or fully. But I understand that we all have different levels of knowledge and understanding and concentration spans, by the way, that particular one. So therefore, feel free to use the timestamps that I will leave in the description to help you jump to the places that you want to learn more about. Now, you see, having your money in the house or under a mattress or in a handbag is risky to the extent that we all grew up knowing that in order for your money to be safe, it has to be at the bank. And then mobile money platforms came. They brought some banking ability to the remote population, which was largely unbanked. Then there were several investment options which also try to minimize the risk while still growing or having our money work for us. But all these options do come with their own levels of risk, and that is the reason why regulation came in to help block out the chances of these losses at to the least minimum possible in their category, especially the obvious ones like the investment company deciding to run away with your money, things like the fund manager getting too excited, to want to invest all investors' money in one vehicle or in one particular area in order to get huge returns. So before I tell you about these three possible ways that are beyond regulations, which are a risk to our money, I believe one of the ways the creators of the money market funds thought wise to minimize the potential of loss was through diversification. You see, the money market funds are diversified. Money is not in one specific area or basket, or in case you didn't know, by the way, your money is not with your fund manager where you did the deposit, and it's also not with the custodian. So where is it exactly? I will tell you that in a moment. But then for you to lose your money, it's not really about your fund manager or your custodian, because they both don't have your money. It will most likely be because of those three main places where our money is. We all know that you shouldn't put all your eggs in one basket, and that's what the money market funds have been literally doing to spread the risk. The essence of having your eggs distributed in different baskets is to help in case one basket falls, breaking some or all of the eggs, zingine zitabaki ziko safe. Or if someone managed to run away, snatched one basket, then the rest of the basket still remains safe. This therefore means that for you to lose everything, then something extremely big happened that caused all your eggs to burn. So in order for you to lose completely everything, then all the following three must first happen. All the baskets must go down. If only one gets affected, the rest are safe, and therefore loss will be equivalent to that particular one basket that got affected. So the first place where your money is to be found is in the banks. Money market funds are invested partly in the fixed deposit accounts and some savings or call accounts. The reason why you get to receive a better rate from the bank through the money market funds is because they go in with a bigger pocket compared to if you would have gone with just your own little portion of money. So if a certain percentage of the money that you deposited is somewhere in the banks around here somewhere, then for this particular money to get lost, it means that the said bank has to have collapsed. And you see, if the bank goes down or collapses and it had money invested there, then your you can start worrying about that particular money. And so far, currently, we do not have any crisis in the bank sector. In fact, most of the banks are declaring huge growth in profit before and after tax. And please be aware that when this money is invested, they do not just go to a random, out of nowhere institution, and you will not hear that a bank like say KCB or Cooperative Bank are just gone down. You will know before it gets there. So the reason why we have fund managers is to ensure that they do not lead the investors to a kichinjio or a hole. So the second place another portion of our money is invested is in something known as commercial paper. This is basically the equivalent of the treasury bills and the treasury bonds, but in the corporate world, the companies. The corporate world at times borrows money or capital for their business, and institutional investors like the fund managers can now go and lend them this particular money. And remember, that is now our what? Our money. You see, if you take a random look at the fact sheets, those ones they send every month, you'll realize that this is one of those places where they put in the least amount of money, like 1% or 2%. And this is because it's easier, like compared to the rest, for a company to default, although that is not a common thing. So for example, a company has put in like 1% and then that company went down. So if I'd put 100 bob, 1% is 1 bob, is what I lost. Yes. So if you're beginning to get me able, let me know in the comment section below. Remember, that is why it is very important for you to be reading the fact sheets. Facts sheets. That word, fact sheet, facts sheet, whatever, I'll write it here. And now the third place where our money is working for us is in the treasury bills and the treasury bonds. Without explaining so much, this is simply the money that has been borrowed by the government from you and me. Yes. So to tumepea gava loan, that is simply what T-bills and T-bonds mean in the most basic definition. And now for this part of our money that is invested in these money market funds to get lost, then it simply means that the government has defaulted and is unable to repay its loans. Before the Eurobond, we had of predictions that the government is not going to be able to pay this. They are going to default and the economy will crash by June. But then what happened? The loan was repaid. The dollar didn't go to 200 bob plus by June like what we had in other stories. Super inflation is also one of the reasons why economies do crash. And what is our inflation currently? It is actually 3.6%, the least it has ever been in 10 years. But watch this. Are there problems in our government? Yes. Should the government be run in a better way and create a better investment environment? Yes, yes, yes. And now the last question is this: is our economy in a crisis to the extent that it is about to collapse? I will say, like the learned lawyers say, ladies and gentlemen, in my humble submission, as much as things are bad, one thing is for sure, that when economy is about to crash, you will not need a guru to tell you that it is about to crash. You won't need a poster on social media to remind you to withdraw and remain, or rather have your money in cash. For example, do you think someone in Sudan or Somalia needs an expert to tell them that the economy is crashing or has already crashed? Well, as I close, there's a very popular quote by Warren that says that when people are scared or afraid, then it is time to invest. But when people are greedy or everyone wants to invest, then it's time for you to stay away from investing. I will explain more in the next video, where I'll go deeper to what causes an economic or economical crash in a country. But in the meantime, fear is a weapon that is used by those who want to make money. Therefore, in conclusion, to answer our question, whether it's possible to lose all the money invested in the money market funds, the answer is right there for you and me to see. If you can successfully collapse all the above three places, yes, where our money is invested, then you will have succeeded to lose all our money. But until then, keep the focus and go for your goals. Thank you so much for watching, and see you in the next video.